Good evening and welcome. Thank you all for joining us tonight for the Solar Finance webinar. My name is Alyssa Russell. I'm an Energy Policy Advisor for Denver's Office of Climate Action, Sustainability, and Resiliency. Our office works to enable a sustainable, resilient, climate-safe future for all of Denver, and we do that in collaboration with fellow departments, other units of government, and community partners. Many of you attending the webinar are likely already members of the Denver Solar Co-op, so you know what's going on. But if you're joining the discussion tonight for the first time, I wanted to provide a brief introduction. The Solar Co-op is a joint initiative between the City and County of Denver and the nonprofit Solar United Neighbors. The mission is to help grow solar adoption in our community, and the co-op is a member-led, streamlined group buy process that helps residents go solar while saving money. One of the primary goals of Denver's Office of Climate Action, Sustainability, and Resiliency is to enable a rapid and equitable transition to a 100% renewable electric system in Colorado. And the Denver Solar Co-op is an important step in helping us meet those climate inequity goals. Starting with this year's co-op cycle, we are piloting a solar equity rebate program, and co-op members who meet low to moderate income eligibility requirements will qualify for a $3,000 solar rebate and a $2,000 battery rebate towards the cost of their project. We also have a hardship fund, which will support unforeseen circumstances such as necessary roof repairs. And the Denver Office of Nonprofit Engagement will assist residents interested in additional bill savings by connecting them to local nonprofits who are administering income qualified energy efficiency programs. The Solar Equity Rebates Program is only one of the many advantages to joining the Denver Solar Co-op. The co-op also saves you money. It simplifies the process of going solar. It unlocks access to Solar United Neighbors team of unbiased vendor neutral experts. It's also free to join and there's no obligation to install. So I will use this as a quick plug. If you haven't already yet signed up for the 2021 co-op, the co-op sign up is open for another 4 weeks and you can easily register at Solar United Neighbors website. I'll quickly drop that link in a moment in the chat box so you have it available. But without further ado, we'll kick off tonight's panel discussion, and it's going to center on solar financing options in Colorado and how to navigate these as part of your solar installation. So we hope this is going to provide you with an opportunity to learn more, and throughout the discussion, we welcome any questions you may have. So now I'll turn it over to Bryce Carter, who is the Colorado Program Director for Solar United Neighbors, and he's going to moderate our panel discussion.
Thank you, Alyssa, and welcome everybody. We're really excited about this partnership with the City and County of Denver and to be working not only on our third solar co-op, but we have several more lined up as we continue to build an impact across the city. And so I want to kick off tonight's panel with a first question for everybody to introduce themselves, tell us a little bit about your organization, and just provide us a brief background on the financing opportunities available for residential rooftop solar through your organization. And to help kick us off, I would love to have you, Jessica, start us off if you wouldn't mind, and we'll go from there.
Sure. Hi. So I am Jessica Blanchard. I am here representing the installer, Photon Brothers, and we're excited to be part of this co-op. We have a variety of financing options available. So pretty much it depends on what the customer wants to do. We don't have a cookie cutter model. It's all based on customers' priorities and desires. So it's very much led by you, what you want to do. And I think we'll get more into that when we get to the next section. Did I forget anything?
No, that's great. All right. Thank you, Jessica. Then let's go with Paul next. And if you wouldn't mind introducing yourself.
Sure. Thanks, Bryce. And it's great to be here tonight. So my name is Paul Scharfenberger. the executive director of the Colorado Clean Energy Fund. We are a nonprofit investment fund that was created in partnership with the state of Colorado. And really, our mission is to try to fill what we call clean energy finance gap. So we're not looking to compete with already existing lending efforts in our clean energy industry. We're really trying to find the spaces where commercial lenders don't typically play. And so a good example of that is low and moderate income households. Really difficult to self-finance solar systems. There's an equity issue at play here. And so we are ultimately looking to structure financial products that support low and moderate income homeowners that want to pursue solar and are typically denied by commercial lenders, either for credit score restrictions or debt to income restrictions. And so, long story short, our underwriting criteria goes much deeper than just those two criteria. We're really trying to change how we view the bankability of borrowers. And so that's really our mission, is trying to fill these finance gaps and provide access to solar, energy efficiency, storage, and really to the entire clean energy transition to all homeowners in our society.
Thank you, Paul. And then Jeffrey.
Yeah, thank you, Bryce. My name is Jeff King. I'm the Senior Finance Programs Manager with the Colorado Energy Office. And today I'll be talking about a financial offering we have in the residential solar space, which is our Residential Energy Upgrade Loan. It goes by the acronym RENU, or RENU, the RENU Loan Program. And the RENU Loan Program is a program that was designed and managed by the office that I work at, which is the Colorado Energy Office, to offer attractive, tailored energy efficiency and renewable energy financing for Colorado homeowners statewide. And so that, of course, would include measures like solar PV, rooftop solar PV, or ground mount solar PV, things like that, but also the traditional energy efficiency upgrades, like high efficiency HVAC equipment, people looking to do insulation, high efficiency windows and doors, et cetera. And just to provide a bit more kind of context on what RENU is, it achieves this and delivers this financing through its public-private partnership. And so there's really two sides to that coin. There's our private sector lending partners that we partner with, and those are all Colorado-based credit unions, of which we have three. So that's Elevations Credit Union, Clean Energy Credit Union, and Westera Credit Union. And those are the local Colorado-based credit unions who provide the financing for the projects that homeowners are looking to get installed. And then the other side of that coin is our network of authorized contractors. So we work with contractors who have expressed an interest and decided to join the RENU Loan Program on a statewide basis. And we do a front-end vetting process and some ongoing oversight of their work to have them become authorized in the program so that they could offer the RENU loan to their customers. We currently have about 160 contractors throughout the state, and that would be a mix of our energy efficiency contractors and our renewable energy, i.e. solar PV installers. And just as a side note, I will mention that Photon Brothers, who's represented here today and is a main kind of the selected preferred partner for this Denver co-op, is part of RENU. They've been with us for I think really since the beginning. And so we have a long relationship with them, and it's great to see them being represented here today. And then just lastly, just some more context on what RENU is. It has been operational for 4 years now. We launched in December of 2017, so we're just hitting our 4-year anniversary. And in that time, we've done over 1,700 loans statewide for $30 million in financing. More specifically on the solar side, of those projects, 1,200 of them have been solar PV projects amounting to 9 megawatts of installed capacity residential for residential sector here in Colorado. So yeah, I'll be speaking a bit more about the RENU Loan Program, and happy to be here, and I'll go ahead and stop the intro there.
Thank you, Jeff. Appreciate that. And then Drew, if you wouldn't mind wrapping us up with introductions.
Well, thank you. Good evening, everyone, and thank you for having me for the solar financing discussion tonight. Drew Britton with Alpine Bank, and I've been in the banking industry for about 12 years. During my banking career, I've primarily worked for the large regional banks. But one of those people you get to read about in the newspaper that got to participate in the Great Resignation this year and joined Alpine Bank. So happy to be here. Alpine Bank's a Colorado-based bank. We've got about 38 branches throughout the state. Founded in Carbondale in 1973. We've got branches from Durango to soon to be Fort Collins. That's a new build that we're working on. All of our new construction includes LEED certified builds and solar panel energy on all of the buildings with electric charging stations available to the community. Through our Environment Loyalty Debit Card program, Alpine Bank's donated over $265,000 to 73 different 501c3 nonprofits in 2020 alone. Moving to our sustainability and environmental initiatives, Alpine Bank created the Green Team in 2006. And through this, the employees wanted to advocate for more sustainable business practices through our network. The Green Team consists of the entire bank workforce and spells out a number of initiatives ranging from paper reduction goals, recycling standards, energy efficiency, clean energy usage, green purchasing, just to name a few. A cool statistic, the bank decreased electricity consumption by nearly 18% since 2012 through these initiatives that I just spelled out. Our green lending program, Alpine Bank offers several programs for consumers to take advantage of. We offer a rate discount for energy and resource improvements to homes and vehicles. Qualifying green projects include solar panel installation, geothermal projects, Energy Star home appliance purchases, HVAC upgrades, and xeriscape landscaping projects. Thank you.
Thank you, Drew. Yeah, as we get into some follow-up questions, just a administrative logistical thing for those that are here, feel free to use chat to ask questions, or if you're watching this as a recording, feel free to reach out to Solar United Neighbors if you have any questions. We're happy to connect you with any of the panelists here, as well as answer your questions ourselves. Our email is coteam@solarunitedneighbors.org. We are a vendor-neutral nonprofit organization, and our main goal is just to make sure that there's education and knowledge about what financing options are out there. So we're really appreciative of tonight's panelists to dig into this conversation and see what's available. And so, Drew, with that said, I would love to go back to you and really dig into who qualifies for your financing programs for rooftop solar specifically through Alpine Bank, and how would a homeowner go about initiating that process?
Thank you. So Alpine Bank's green lending program is open to all homeowners in Colorado. We do require a minimum 20% equity in the property, and we're going to apply our standard underwriting practices. We do, in turn, however, offer a 0.5% reduction in the interest rate that you would normally qualify for. So to initiate the process, you'd want to contact myself or any local Alpine Bank loan officer and just let us know that you're looking to take advantage of our green lending program for a solar project. We'll have you complete a personal financial statement, loan application, and we'll collect the appropriate loan financial documentation. Outside of the normal documentation required for the bank loan, we're just going to require a quote for the proposed solar project to qualify for that 0.5% discount.
Thank you, Drew. And I guess I did have a question just in terms of the equity. Can you talk a little bit more in terms of a homeowner that maybe they just got a house and they're looking at going solar? Like, what are some of the considerations as a lending institution that they would need to think about to be able to secure that equity and move forward for project?
Yeah, so that maximum loan to value would be 80%. So, just for easy numbers, and this isn't a very realistic scenario, but if you're looking at $100,000 home value and you owe $80,000, going to need a little bit more equity in that to qualify through our conventional underwriting practice. So, depending on what that solar project costs, if we're going to underwrite that, we're going to need a little bit of equity in that home to qualify through the bank home equity line program.
Okay, so in that case, say maybe there's $30,000 of equity, then that's something like a $10,000 could go toward a solar system.
You got it.
Great, thank you.
Right.
All right, Jeff, going to you now, and regarding the kind of the new program offered for the Colorado Energy Office, how does that financing option for residential solar in particular, what do homeowners need to do, and what would they see, or what's different with that program versus what you see with financial institutions?
Yeah, sure. Thanks, Bryce. And maybe I'll just kind of clarify how I think about that question, frame it. So I'm kind of comparing it to less so like the local banks in Colorado, like Alpine, who are doing a lot of great work in the space, and maybe more so some of the other like national based private financial institutions providing solar financing, for example. So one of the things, I think that's a good chance to maybe speak a little bit about what sets RENU apart and why it was created. So I'd say first and foremost, it's local, right? So the RENU loan program is managed locally with the state government. It is a state-sponsored loan program with private sector financing who fuels all the projects itself. And then our lending partners, as I mentioned earlier, are all local Colorado-based credit unions. So if it's a matter of customer service or the fact that the people that you're helping employ are local, to the extent that is a consideration for you for financing, that RENU would be a good option in that regard. Secondly, I'd say it's simple and transparent financing. One of the benefits of credit unions is that they're not-for-profit, often member-owned institutions. So if you think about things like interest rates, fees, et cetera, you can generally be assured that you're going to get a good deal in that department because you're working with the credit union. Separately, the way RENU is structured from a financing perspective is that it is a personal loan. And so real estate is not called into question. As I said, you do still have to be a homeowner, but the real estate is not being used as collateral. There is no requirement to be pulling in equity, for example, to qualify for the loan. It's treated as a personal loan, and it's actually secured via something called a UCC1 filing, which is actually a legal claim that's placed on the measures that are installed. So in this case, maybe the solar system that's installed on your roof, but not actually any type of legal claim to the property itself. And then additionally, on the financing piece, there's no dealer fees. I think this is an important topic when we think about solar financing. Dealer fees essentially are the cost that the contractor has to incur in order to offer financing to their customers. The RENU loan program prohibits such dealer fees in the program. Those dealer fees often get passed along to the homeowner in the form of a higher project cost. And so when you're working with credit unions and you're working through RENU, there is no dealer fee. So it's very transparent. It's kind of what you see is what you get type of thing. And you're not have to do all this kind of like background math to know if I'm getting a good deal or not type of thing. And then lastly, I'd say there's a lot of options and flexibility. One of the benefits of RENU is that we do have kind of a competitive lending market within the program because we have 3 lenders who are kind of, in some sense, competing with everybody's business. So what that means is you would have an option as a homeowner to select the particular lender that maybe suits you the best, and they have some variations in their financing and terms and things like that, but they're generally all pretty comparable, and we require that they work within certain parameters of the program. As an example, we ask that lenders, we encourage them to finance 580 FICO scores and above, to do 20-year solar financing, et cetera. So you often see those kinds of features in the RENU financing piece. So those are just some of the things I'd maybe highlight right out of the gate as far as how RENU might differentiate itself from other financing out there.
Thank you, Jeff. And I did want to follow up on the FICO scores in terms of why is that important?
Yeah, so I think when people talk about things like inclusive underwriting and being able to get as much solar out there for as many people as possible, the FICO score requirement is often something that can prohibit somebody from obtaining financing for something like solar or anything else. And so through the partnership that we have with these credit unions, we were able to negotiate more favorable underwriting criteria. So one of those, for example, would be that 580 FICO score, in addition to pretty attractive rates. Those are some of the things that we first and foremost negotiate with participating lenders to be able to meet those requirements. And I'll be the first to admit it's not perfect. It's not to say everybody with the 580 FICO would qualify for financing because they still undergo the similar type of underwriting that like Alpine Bank would do, for example, and that Drew had talked about. But it is something that we negotiate and do our best to make that as open as possible to potential borrowers.
Thank you. Yeah, I appreciate that clarification. And I guess as we talk about equity, I want to move to Paul. When we look at having financial options for rooftop solar under the Colorado Clean Energy Fund, how do you all address important equity considerations and fill that gap for homeowners who may not qualify through traditional lending?
Yeah, it's a great question, Bryce. Just to echo what Jeff said, the other programs that we're talking about today through Alpine and RENU are just fantastic programs, fantastic lending institutions. But they are regulated lenders, and there are certain realities that they need to live within. And there are pretty traditional underwriting practices that most commercial lenders utilize. And that typically is based on FICO score, debt to income, potentially equity in a home. And there's a fairly significant portion of our population that just cannot meet those standards. We, as a mission-based investment fund, we have a little bit more flexibility in terms of what we're able to do with our capital. And so recognizing that, for one, we can't achieve our climate goals by investing in a subset of our population. And then in relation to equity, a fairness discussion of who can and should be able to participate in a clean energy transition, we need to be as inclusive as possible. And we really need to be creating structures and systems that invite that inclusiveness. So what we're attempting to do, and I think the novel approach that we're bringing, is trying to expand that underwriting criteria to include more than just a few metrics to determine somebody's bankability. This is a relatively new endeavor for us, and so this pilot program is going to be a really important information gathering session for us. But that's how we're approaching it. And we have seen other programs in other states that are lending towards low-income homeowners that actually have very low default rates, less than 2%. So we actually feel like we can be successful by lending to this population, still offer very attractive terms. So for this pilot program, we're offering a 12-year loan term at 3%. And ultimately, we'll reevaluate at the end of this pilot program and see if we need to adjust those terms. But really, the equity issue, it's inclusiveness. And one other thing that we need to talk about is energy burden. I recently connected with somebody that's doing a study of energy burden across the state, and there are some communities that pay 35% of their total annual income just towards their utility bills. And a ton of people pay up to 20% of their total annual income just towards their utility bills. To put that in context, upper income people typically pay about 1% of their annual income towards utility bills. This is causing a huge financial equity issue. And so pursuing solar, which over time will save these consumers or these homeowners money on their utility bills, is vitally important to addressing the financial inequities that are created just via our energy system as a whole. And so we're really trying to tackle the systemic issues that are leaving this population out of accessing capital, and also the systemic issues that are creating a financial and energy burden that is really keeping a lot of these people from being able to achieve some mobilization in terms of having more income and discretionary income in their pocket.
Thank you, Paul. And I imagine one question a lot of people might have with a program like this is, how does a program like yours get the capital to serve communities and to grow this type of equity? And I know your program is relatively new and it's looking at this pilot program. So I guess, what has it been like to roll out this program and to get to this stage?
Well, we were really fortunate to receive capital. As I mentioned initially, we were created in partnership with the state, and we were fortunate to receive investment capital from the state. Again, that provides us quite a bit of flexibility because that was a grant from the state. So our cost of capital is zero. And that again allows us to be quite flexible with our lending terms. In addition to that, we're also raising capital from local and national foundations that really want to see these equity issues addressed. And again, that's very low cost of capital that we can procure to really allow us to do some things that other lenders may not be able to do. And so it's been a long road, but it's an exciting one. This pilot, again, is going to be just such a great learning experience. And I think with the data that we compile from this, that'll then inform a statewide approach that we'll seek to launch in 2022. Again, not looking to compete with the great lenders and programs that we're talking about today, but really focus specifically on that LMI population that can't typically qualify for traditional financing.
Thank you, Paul. And LMI being low to moderate income for those that who may not know. So then let's move on with Jessica. If you want to, we've talked a lot about the financing options with homeowners and through government incentives, talked about kind of the nonprofit and private financial institutions. But how do these options interact with the process between the homeowner and a solar installer? And could you walk us through kind of what that, how you as an installer with a customer evaluate their financing options as it relates to their specific solar project?
Yeah, so we find that sometimes people come to a project and they know exactly what loan they want. They've already talked to a lender and they've got everything ready to rumble. And then we have the complete other end of the spectrum where we have someone who has no idea what they qualify for or where to even start looking. So we actually have several partners that we are set up to directly work with, including the RENU credit unions, but also several other lenders throughout the state and country. So everything from the customer who just wants a very small short-term loan so they can wait for their tax credit, to someone who wants a 25-year loan with a very low interest rate and doesn't mind paying some of those fees for a lower interest rate. We kind of, you sit with your consultant and they ask you some leading questions and kind of propose some ideas. And then if that conversation needs to go further, you get to talk to myself, and I'm actually training a loan specialist right now to go through those really intricate jobs. So occasionally we get someone who can't qualify for one of the big lenders and that was the loan they wanted. Well, then we send them to the RENU program because of those more flexible options. I'm really excited to talk to Paul about the things they're working on. I'm like really proud of Colorado hearing a lot of this stuff that we've got going on. But it's really just depends on the priorities that the homeowner has.
Yeah, I guess at what stage does that conversation come up as someone's looking at going solar? Like, when should they be asking that question of financing options? And I guess a little bit more of what considerations should they have as they determine like what terms are going to be best for them?
So it'll come up right from the beginning with your solar consultant. Maybe not like right off the bat, but pretty darn quick. We're going to talk about some people are really interested in local options. So we'll look at the local credit unions and the various options there. Some people just want to essentially replace their electric bill. So we'll do some looking at what their monthly average is for their electric bill and then what loan would be comparable to that. We have some options that are no fees. We have some options that are frankly astronomical, but they have that really low interest rate. So, how long do they want to hold the loan? Do they have any debt to income ratio concerns, any equity concerns? And what kind of, are they worried about that overall cost, or are they worried about that monthly cost? And then the other thing I wanted to mention is if someone's not a direct partner, like Alpine is not currently one of our partnered lenders, we still can work with them. So if you have a lender that you're really set on and a loan you really like, we can work with that. You just might not have me calling you saying, hey, where's your paperwork and turn this in and all that fun stuff.
Great, thanks. Yeah, and I think those are the initial questions that we have for this evening. So one, I would like to invite our attendees, if you have any questions, to feel free to post them in the chat. But also all of the panelists, if you have any questions for each other, I invite you to ask each other questions, because again, there's, I think, a lot of cool, exciting programs from everything that we heard about Alpine Bank, the sustainability program, the RENU program, and the 9 megawatts they've been able to develop. The Clean Energy Fund, I'm really excited about to see where that can go. And certainly with Photon Brothers, as a selected installer by our members, there's a lot of interest and excitement about being able to move forward with those projects. So what questions does anybody have? Or yeah, let's start there. Does anybody here have questions for each other? Cool. Then I might hit Alyssa on the spot, if that's all right, because I would love to hear maybe the context of a little bit more about where the city is, and with the funding the city is receiving, like the big picture, what this all means in terms of financing and making solar as well as other renewable energy more accessible as we look at addressing the climate crisis.
Absolutely. So the root of all this is in 2020, Denver voters overwhelmingly passed 2A, a ballot measure, which established the Climate Protection Fund, which is a local sales tax that will bring in roughly $40 million a year for Denver to put towards sustainability, resiliency, and clean energy programs and initiatives. And as part of that ballot initiative, it was written in that a huge component would be equity consideration. So a large portion of the Climate Protection Fund will be directed towards projects that prioritize our most vulnerable neighborhoods in Denver, those who are really at the front line of the climate crisis. And specifically with the Denver Solar Co-op, we've used funds from the Climate Protection Fund to establish a pool of money that will go towards the solar equity rebates. We are very much piloting that this year, and the specifics we've laid out for rebates in this cycle may change in future cycles based on lessons learned, but funding for that will absolutely be available in this cycle as well as the next 2 upcoming cycles. So we're really excited for that. We think that it will open the door for a lot of homeowners who just didn't see solar as an option for them beforehand.
Thank you, Alyssa. And, I think that leads me to another question. As we look at the challenges and the transitions happening in the industry, and not only the need for resiliency, but I think a lot of homeowners and grid operators are starting to say, well, it's not just solar, but it's really the system itself. At the home level, you're looking at efficiency, you're looking at solar, battery storage, electric vehicles. You're looking about how with smart grids and smart meters, how does your home interact with the grid? And so I guess my question for all the panelists is, as we see these trends and these types of technologies mature and become more accessible, how is that influencing the financing world and how these projects are valued and what services they could provide a grid?
I could jump on that one first, Bryce, and just speak from the kind of a little bit of the state government, but more so my own personal stance here from the RENU loan program level. So I think a couple of things come to mind. I get first and foremost, I think what you see is if somebody's kind of looking for that trifecta, so to speak, with solar, maybe battery storage and electric vehicle charging for their EV, I think what you see is a pretty stark increase in the total project cost, right? Because now you're seeing like a total system that could be $50,000 or more type of thing if you're looking to get all those things done, or if you're even maybe looking to add some energy efficiency measures to that to really tighten up a home. And so I think what that does increase the importance of attractive financing, because as you kind of put all those measures together, the cost naturally goes up. And of course, it's in many cases, it's very economical to do that over the long term, but you are looking at a pretty hefty upfront cost. And so financing becomes a critical component of that. And so from the RENU perspective, we're admittedly, we have some limitations with our funding, which have prevented us from being that one-stop shop to be able to kind of wrap in all of these just kind of new energy efficiency and new renewable energy measures where we see the market going. And so we're making efforts to do our best to position RENU as a place to go to get all of that whole suite of stuff that a lot of people are starting to consider moving forward, really allow people to get that home of the 21st century that I think we're all envisioning. So that's kind of how we think about that at the state. And we still have some work to do to fully position RENU in that spot, but that's where we're headed.
Well, we do have a few audience questions that have filtered in, and I believe one of them really nicely tags on to the conversation Jeff was just having. So we have a question here that asks, can a RENU loan be used through the co-op to finance solar panels and an additional home project like installation? So the question is whether or not RENU can be used through the Denver Solar Co-op, but also taking advantage of other things like weatherization in homes.
Yeah. To jump in from the RENU perspective, because that seemed like that was targeted to RENU. The short answer is yes, we do allow and certainly encourage the bundling of projects. So multi-measure renewable energy and or energy efficiency projects are certainly allowable. There are some nuances in some cases to that in terms of how that gets handled on the back end. But nothing that's insurmountable. And what I mean by that is oftentimes a solar company might just do solar and they don't do insulation, although there are certainly some solar companies who do offer insulation alongside a solar installation. And long story short, in some cases, those could all be bundled under a single loan, but there might have to be a little bit of coordination to line up a separate contractor who'd be willing to come in and do that insulation project. But from the homeowner's perspective, it could be all lumped into a single loan. So you only have one single loan application, one credit pull. That's all kind of, one transaction, so to speak. And then on the back end, the credit union would be able to disperse the funds, the loan proceeds that go to the solar portion to that solar installer, and then the loan proceeds that would go to the installation contractor, for example, they would be dispersed to them directly as well. So yeah, we certainly allow and encourage that.
And I'll just jump in there too and say that sometimes we have a situation where we have a contractor that we can partner with, where you can have the funds completely dispersed to us and we pay the contractor on your behalf. It just kind of depends on your personal situation, but that's what we pride ourselves on is being flexible with our customers to the right extent.
Well, I'll jump in there as well, just to mention part of our solar equity rebates program is connecting homeowners with local nonprofits who are administering energy efficiency programs. We do think that taking a whole home approach really is the best way for homeowners to save money and make a difference in terms of climate. We have another audience question here as well, and I believe this one is directed more generally towards the entire panel. Recognizing that it is very dependent on individual circumstances, what are the general interest rates currently available, and specifically with and without fees?
I can jump in there, Alyssa. So again, just to reiterate, we're really focused on the subset of folks that qualify for the equity rebates. Those are the folks that we'll be seeking to provide financing to for the the balance of the system costs. And ours is really a flat rate. It's 3%, 12-year loan, no fees. And that'll be for everybody that we lend to through this program. As I alluded to before, this will really inform a future statewide offering. So some of those terms could change based on what we learn. But for this program in particular, everybody that qualifies for the rebates would then also automatically qualify for a 12-year loan at 3%.
And I can just share an additional data point from the RENU perspective. We do have rate sheets from all of our credit unions. And so I have some numbers memorized in my head, but these are not authoritative. I could certainly share the rate sheets, which are publicly available from our participating credit unions. But for a typical RENU borrower, so kind of distinguishing RENU from what Paula just suggested, which is kind of more the LMI focus, a typical RENU borrower might have, would have like a 700 FICO score and above. So for a higher tier, top tier borrower like that, from a lending institution's perspective, for a 15-year loan, we often see about 5 or 5.5% interest rate, and that would go up slightly for a 20-year loan. And the fees with that are generally very nominal. I know one of our credit unions doesn't even charge a loan origination fee. And then those that do are very nominal, to the tune of, say, $25 or something along those lines. So very, very quite inconsequential in terms of the overall size of the loan. So that's just some additional data from the RENU perspective there.
From the traditional financing point of view, we're going to be in the anywhere from 3.5 to 4.5% range, with anywhere 1/4 to 3/4 of a point origination. Kind of depends exactly on every particular situation, but we can structure that on a 5 to 10-year term on that side of things.
And to jump in on the other variety of options we have, I have everything from a 0.49% interest loan, but you're going to pay about, I think it's 23% of a fee on that loan, because so you're paying a lot to get that interest rate. And then, of course, all of the options mentioned here through RENU, all the way up to, so that 0.49 is a 25-year loan. We have as short as a 3-year term. I believe that's actually a RENU loan we talked about. In middle of the run, you've got a 7-year 4.99 that might have a 12% fee, and it really does run the gambit, and that's depends on your credit score and your ratio and their each specific lender's underwriting criteria.
And I'll chime in, in terms of folks while watching this, trying to learn what options are available, shop around and definitely ask questions. And if you get confused, again, we're all available as a resource to let you know what your options are and run through your specific circumstances, because it is circumstantial based on a lot of factors. And John brought up a very important question as well. And I wanted to kind of take the theme of the fact that we are seeing changes with the electricity sector. And in particular, we're seeing smart meters being deployed all across Colorado, specifically in Xcel Energy territory. In addition, there's also an increase in electricity rates. So I guess, one, I'll just flag that we are planning our next webinar. We're actually going to be digging in, and we're going to work to have an Xcel representative talk about time of use and provide information about that, because we know it can be wonky and want to make sure people have that information available. In short, it basically means that the cost of electricity is going to change by the hour throughout the day, and those rates are going to be different based on the season as well. And so given these changes, what does that mean in terms of estimating the cost of a solar system and how quickly it could return its value, knowing that time of use is a very much a behavior thing, as well as other changes that might happen to electricity rates over the next 10, 20 years as we look at the lifetime of these systems and potentially the life of the loan? Or I guess in other terms, thinking about risk and liability. What does that mean in terms of underwriting these types of opportunities?
I can jump in, although I don't think I'm super qualified to speak on this, but having seen how this sometimes gets presented in solar proposals from some of our solar installers, often I think the bottom line is that it's probably a favorable incentive towards heading to solar because the electricity rates with time of use, as I understand it, are probably going to be a bit. You're going to be paying when there's higher demand, you're going to be paying a higher cost for that electricity, which happens to coincide when you're going to have the most production from a solar system, for example. And so I think it helps you circumvent some of those incoming rate changes that are not going to be favorable to a homeowner by having that solar system. And so I have seen, again, I think probably a lot of the solar installers, and maybe I'm not going to put Jessica on the spot, but I'm sure someone from Photon Brothers would be able to speak more eloquently to that. But I have started to see that reflected quite a bit in some of the solar proposals that come through from RENU and are really creating an environment that is lending itself even more towards having that distributed generation on your own roof if you can have it.
Yeah, I was actually pulling up a proposal here so I could speak to that a little bit. We can model it to an extent using our proposal software. We look at what your utility expected increase in cost, and we actually can look at your exact roof and the amount of solar exposure you get. And so we have actually graphs on our proposal that show where your energy consumption will outpace your energy generation. And so it is modeled out on our proposal. And that's definitely something that would be better asked for a consultant, because that's about the extent of my knowledge there.
I think the only thing I would add to that is from the investment side of things. I mean, really, most commercial traditional lenders, even ourselves, a non-traditional lender, we base our terms typically off of information. And so we would have to gather the information, really see what trends are taking place for that to move the needle in terms of financing. So I think to Jessica's point and Jeffrey's point, you're going to see a lot of this discussed more in these proposals. But from a financing point of view, it's going to take time for that to actually move the needle in terms of changing interest rates and loan terms, et cetera.
Yeah, and I'll add, we are working to crunch the numbers because it matters not only behavior and your electricity demand in your house, but if you have a eastern facing solar system and you're only getting that production in the morning, that's going to be very different than a western facing system when electricity in the evening might be more expensive. Even then layering in a battery, for instance, and being able to leverage excess production and what those costs are. And so certainly I think this is where the industry is going to be going more into, and it's complicated. And I think all of us are kind of learning as we see these transitions, and that's part of what we want to evaluate is how do we, what are these trends going to mean for homeowners and the decisions they have to make in the future?
Well, I'm not seeing any other audience questions right now, but for those who are perhaps approaching this topic of how to pay for their solar system for the first time, one thing that we haven't talked about, and maybe it's a question for Jessica or Bryce, would you like to maybe touch a bit on the federal solar investment tax credit and how people can see a reduction in the cost of their solar system by utilizing that?
Jessica, do you want to take this, or do you want me to dig into it?
I'm going to let you, because my answer is usually talk to a tax pro.
Yeah, well, I'll preface that. Yeah, in terms of your circumstances, talk to your tax professional. But ultimately, there is a federal tax credit. Currently, it is 26% off the total cost of your system. I actually took advantage of this myself, and it's a credit that you'll get the following tax year. And in my case, we actually took down a tree to give ourselves a solar access. You could actually include that as well. There are conversations in Congress right now with the Build Back Better policy to actually bump that back up to 30% and potentially extend it 5 years or more. So we'll see. As of now, you can only get the tax credit if you're a taxed entity. So if you're retired or you're a nonprofit, you can't take advantage of that. There's some ways that there are groups that support that, but I know with the Build Back Better, there are things that Solar United Neighbors has been advocating for to make sure that there can be a full-on rebate, no matter what type of entity you are. So nonprofits, for instance, will be able to get that money back. So it's a really great opportunity to make solar and renewable energy more accessible. I should add that like, if you install your solar system with a battery, that also would qualify together. So we just have to see where this policy goes. Otherwise, if the status quo stays the same after next year, it's going to go down to 22% and then phase out completely for residential and then level out at 10% for commercial. So we'll see what happens with the politics over the next couple of weeks. Hopefully, we'll have a Christmas miracle.
And yeah, I can just jump in and add some more color to that and build off what Bryce had said from a financing perspective. And we do see this under the RENU loan program, but usually as a kind of building off where Bryce had left off, given that tax credit is going to be happening the following year for an individual that would qualify. You really have two options when it comes to financing for that. And you can either include the entirety of that solar system under a single loan, meaning so that'd be 100% of your solar costs, you could finance that. Or the other option would be, some of the lenders do this, you see this is very common in solar, is they'll do two separate loans. It's often referred to as a combo loan, where they'll do one loan for the tax credit portion. So that smaller percent, the 26%, would be a kind of a short-term finance loan. And then the remaining portion of that would be financed under a long-term loan. And so there's pros and cons to both of those approaches. With the combo loan, you're able to kind of break that financing up, so you're not carrying paying interest on something that should be refunded to you or is expected to be refunded to you via next year's tax credit. But it also means if you don't get that tax credit you're expecting, then you may be hit with kind of surprisingly high interest rates on that because you haven't paid that short-term loan off in time. And then with the other option is to finance the full amount of that all as one. And then when and if you were to get that tax credit back, assuming you had a lender that would allow for this, you could then start applying that money back to the principal on the loan. And so just to pitch RENU briefly on that, one of the options or one of the benefits of RENU is we have lenders who offer both. So if you want to do a combo loan approach, we have lenders who do that. If you want to just finance the entirety of that and then see what your tax refund is going to look like, because that can be a very complicated situation, as we all know, which is why we always say just talk to a tax expert. But if you want to go that route instead, which can be a little bit safer, but you're carrying that interest rate, then you can do that. And we have lenders that when and if you get that tax credit back or would like to take any additional cash that you have on the side and apply that as principal to the loan, they would allow you to re-amortize that at no cost. So it's nice to be able to have both of those options depending on your own personal tax situation.
And to piggyback off Jeff, we also have some lenders that calculate your monthly payment, assuming that you're going to pay that tax credit into your loan. So if you don't pay that, then your payments will go up. Or if you pay more than that, they will go down. That's just a couple lenders, but that is a kind of a unique format that they have set up. We also have some customers want a loan just for that tax credit portion, and that's an option that they can utilize. So yeah, there's definitely a lot of different ways to address a tax credit in your financing plan.
All right, well, we are at the top of the hour of just a couple minutes left. And so I want to do one last rapid fire question, which is, what is the favorite part of your job? So Jessica, why don't you kick us off?
My favorite part of my job, that's a hard because I really do love my job. I get to talk to a lot of customers who are really excited about what's going on their roof. I get to have a lot of Colorado pride because we are located in Colorado and I grew up here, so that's really neat. But really it's our customers is definitely my favorite, is getting to have those, to see the project go from beginning to end and hear how they're excited to turn on their system and maybe less excited to start paying their payments on their loan, but it's really fun to build that relationship with them.
Great, thank you. Paul?
I really like that we work in the hard to reach places. It's complicated, it's hard. Nobody's really figured out how to do it at scale. And so I like the challenge of it, but probably more importantly, a lot of the people we work with have never really worked within the lending system. And so it's just bringing people in who've kind of been left behind in many regards. So that's probably my favorite aspect of the role.
Jeff?
Yeah, I would probably just highlight the local aspect to it. I love the fact that the work that I do is building a Colorado-centric ecosystem for financing, for economic development, for environmental benefits, all of that kind of all wrapped under one single roof or one single program. I really pride myself and in the program on the fact that we have all these local contractors who are able to get more projects for their own benefit, but also for the benefit of homeowners. And it's all done locally with local installers, local financing, and local homeowners. And just being able to build that all those kind of benefits that I just described here locally has been a big source of pride.
All right, and Drew, please wrap us up.
Yeah, my favorite part of my job at Alpine is helping individuals and businesses achieve their financial goals, and be able to do that in a community space. We're very community oriented at Alpine. We donate a lot of money to 501c3s, and we're I think the second most thrifty, I guess it would be the term, organization in Colorado, donating to charities. And so being able to help nonprofits and individuals, businesses achieve their dreams is really a satisfying thing for me.
Just on behalf of myself, Alyssa, and the Denver Solar Co-op in this collaboration, again, we really appreciate everyone's time to participate in this panel and answer a lot of these questions and do some visioning as well. So we're excited to continue to expand solar access, and whether it's through the various financing options or rebates that are available to support people going solar, we're happy to make this information available. So again, on behalf of everyone, thank you so much for your time, and I hope everyone has a wonderful holiday coming up.